Morning everyone, you've tuned into ET Now. This is Buy Now, Sell Now with me, Karanya Rao and Varun Hiramat. Let's start off the show by taking a look at the top headlines. First up has to be the markets. Global markets definitely looking nervous. Overnight as well, we saw a weak handover from Wall Street. A relatively less weaker one given the carnage that we saw during the day in the European markets. This is on the back of the fact that restrictions in Europe are likely to come back in various countries. There's a second wave that is being recorded for COVID-19 across Europe. So global market were reacting to that. But thankfully, we've been able to see some relief from yesterday's carnage on the Wall Street today, with markets doing relatively much better. Meanwhile, Gita Gopinath says more direct funding push will aid India recovery. So some important comments coming in from that end. As far as earnings are concerned, you had HCL Technologies, which came out with their numbers. Good performance seen by the IT giant. EBIT was at a 5-year high. Continuous automation focus, right-shoring focus. These are some key triggers the management flagged off, which are helping them lead growth. Tata Communications, another big one to watch out for in trade. Meanwhile, the GST saga, Centre offers truce, offering to borrow 1.1 lakh crore for compensation to states. So that's an important update to keep on your watch list. And finally, some important comments coming in from Uday Kotak. Second half of fiscal year should be a period of recovery. It is in fact the best time to invest according to the ace banker. And finally, you have SIAM Data to be released later in the day. Let's see how the retails have panned out and what is the commentary and outlook from SIAM as well. So these are the top headlines to keep on your radar this morning. Back to you, Varun. Tell us what's happening in the markets.
Sure, Karanya. Hi, good morning. Let's get into the markets, but before we do, we just have our question for today, the BNSN quiz question that we need to bring to your attention. And the question today is, which of the following bearings companies have the highest ROCE? And your options are Timken, SKF India, Schaeffler or NRB Bearings. So we're talking about TTM ROCE, or the ROCE over the last 12 months. So keep a lookout for that and do tweet your responses to us on the ET Now handle. And we'll be glad to feature you at 11:45 if you indeed are one of the people who managed to guess the answer correctly. Let's now take a dive into the markets, and if my screen isn't lying to me, the breadth has really changed in favor of the bulls. The Nifty is up around 0.7% at 11,759. The mid-cap index is up 0.66%. The auto index really competing with the bank index today as to who can get a higher gain. The auto index is up 1.10% and the NIFTY Bank Index is up 1.05%. So they're competing with each other. 39 stocks from the Nifty advancing, only 10 declining, so that's good. And I'd say this breadth is really particularly positive given that we've not had a very strong US handover and we've been on a bit of a shaky footing over the last couple of days. In terms of particularly what's standing out, winners and losers today, you have a BPCL really soaring away in trade, up nearly 3%. A Devi's Lab making a comeback, up 2.5%. Hero Motor up 2%, Titan up 2%, Tata Steel up 2%. On the losing side, you have a UPL post, the auditors resigning. KPMG still shook. It was down 8-9% in the morning. It's recovered a bit, but still down 5%. HCL Tech, despite fairly decent numbers, down 3%. Nestle down almost 1%. And then Asian Paints and IOC competing with each other, down over 0.5% each. So those are the stocks that's really hogging the limelight today. Back to you, Karanya, for more on the markets.
Right, our guests are ready, so let's bring them on board. We have Sharmila Joshi on fundamentals and Kunal Bothra on the technicals. Good morning to the both of you, and thank you so much for joining us this morning. Kunal, coming first to you, what are the key resistance levels that one should be looking out for at this juncture? We saw just about a few days ago, Nifty touch a 12,000 trade, comfortably above that and retreating quite significantly. Of course, there are a lot of fundamental triggers, global cues as well, that the markets are reacting to. But from a technical standpoint, if you could give us a sense of how to navigate this volatility.
So, good morning, Karanya. I think there are two set of indicators the markets are throwing. One is the last 15 days of price action rally. So we can either look at yesterday's sell-off in entirety and expect that maybe it's a reversal. But if you look at it in the context of what's happened in the last 15 days, from 25th of September approximately. I think from there on, the market texture had changed completely. You had emergence of banking stocks. Bank Nifty made a very strong and a solid comeback in that context. So, after a 1,200 point rally on the Nifty, after more than 3,500 plus points on the Bank Nifty, you're bound to see some bit of retracement. You're bound to see some bit of correction because such kind of a steep rise generally causing for a quick mean reversion, and those quicker mean reversions leads to intraday corrections or intraday sell-offs of the magnitude of yesterday. One of the other I would say confirmations for that is the markets are not seeing a follow through of yesterday's price action. So that generally indicates that this is more of volatility which happens, or this is a mean reversion process. It could be possible that over the next maybe couple of days you may have one more round of selling pressure. So the markets are now trying to grapple into a mean reversion kind of a mode. Now in this process of mean reversion, there are two supports which we technically look at. One is a 38.2 retracement support. So from that 10,800 rally, 10,800 support to a 12,050 kind of a rally. So almost a 1250 point rally. You look at a 38% retracement. That comes very close to that 11,700 mark, from where we've taken the first set of bounce on the Nifty today. The second major support is a 50% retracement support. And that I believe we should come to 11,450 or 11,500 kind of zone. So I believe that the markets could probably trade in these support bands above 11,700 for a very short term, say for today and tomorrow, today and Monday possibly, and probably about 11,500 for the next a week or two odd. So I think till the time we are trading about these comfort levels or the support levels, the bias could remain a bit positive, but it's just that because of these heightened volatility, it becomes difficult to size up your positions to a larger extent. So you can scale down the long positions, but I think the bias could remain largely bullish. You might have one or two odd sells in your trading I would say trading kind of portfolio, but then largely the bent has to be towards bullish till the time the indices are trading about these key support levels.
Okay, Sharmila, hi. What are your fundamental picks for the day?
Yes, so I'm going with two stocks. One is a company where we've already got results and a very, very good set of numbers. I'm obviously talking about Infosys. It was a beat on all fronts. And again, I think going forward, Infosys is one sector which, IT is one sector which according to me is sort of low risk, and which is why I'm going with a company where we have numbers and numbers, numbers are declared and numbers are very good. So I'm going with Infosys. The other stock that I'm going with is from a sector where again numbers are expected to be good, but we haven't really got numbers. We are in that earnings season, and these companies are still to declare their numbers. I'm talking of the cement sector. Within the cement sector, numbers are expected to be good for quite a number of companies. I'm going with Ultratech Cement, and here again, I think that if you will see that run up as we get closer to them declaring their numbers.
Okay, thanks for that, Sharmila. Let's now get a move on and take a look at the queries for this morning. Gaurav Sharma from Hyderabad has written to us. He has bought ITC at 174 rupees per share, so very good price, but still it's fallen more since then. Should I exit to cut my losses or continue to hold? So Kunal, let's come to you first. Such deep value in ITC, but is Gaurav going to recover his money or make money anytime soon, or is it going to take a little longer than he might think?
I think, so one thing is very, very clear over here, one that investors who are looking at ITC and then they're looking at the ticker every day, I don't see a reason why, these, investors, long-term investors, but they look at the tickers every day, they would, tend to make money. ITC is a stock which has done exceptionally well over the last, 5 years and 10 years in the entirety. Yes, in the last 3-4 years, the stock may have lost, some bit of its mojo. But I still believe that it's a stock which, because of the low beta nature, because of the traction the stock gets in certain periods of markets only, in certain duration of the market trends only, it's possible that the stock will remain low. So when you want the stock to perform, it may probably remain sideways, but then it can surprise you, with a very strong, catch up as well over a longer term period. So I think ITC, and since you bought it at a very reasonable price of 174, which is very close to the current market price, maybe just I think a 5-7% off. from the current market price, then I still believe that you can hold on to it. But again, my advice is don't look at this as a short-term investment. Look at this as a pure long-term investment, and I believe that the stock can have potential of rewarding quite handsomely for long-term investors.
Okay, so clearly ITC is not the kind of stock you need to be looking at on a daily basis. You're really taking a long-term bet over here. Sharmila, do you feel the same way, or do you feel that at the current juncture, it's perhaps a bit too undervalued and you might see a little bit of a rebound before the long-term story then plays out?
Well, I think you must have seen it as well. There has been a small graphic that has been doing the rounds, which sort of compares ITC with HUL, in terms of revenue, their profit margins, etc. And ITC compares very well. But the problem for ITC has been the fact that cigarette business is something that a lot of mutual funds are not looking at anymore. And for ITC, cigarette business is still the biggest contributor to their revenue. So for the last many years, we've been hearing that it will be the FMCG and their other pieces of business will become the bigger revenue drivers of the company, and which is something that one is still waiting really for it to play out. Because, honestly, cigarette business globally is a dated business. So I think that is really what plagues the stock. But I would completely agree. I think this is a long-term story. And they have, and given the price the investors bought it at. So if you look at the entire consumption space, it would probably be a stock where numbers are good, but valuations are probably way cheaper than some of the other leaders in the pack. So I think keep your view long-term and hold on to the stock. Just be aware that one of the reasons why ITC gets a lower valuation than, for instance, an HUL or any other, you could pick any stock within that space. It is largely because of this ESG component playing out against them and people really shying away from buying a single business.
Okay. Thanks for that. Let's quickly address our second email query. It's from Rajesh Kashyap of Kolkata. He's bought Canara Bank at 90 rupees and he wants to hold on to it for a short to medium term time horizon. So Kunal, if you could tell us your view on Canara. While yes, it has seen its highs, in the recent times, it's traded close to 115, 120 odd rupees. The fact of the matter is it's back once again in that 80 odd rupees levels. Where do you think it's headed?
I think Canara Bank and SBI, they both look, I would say, short to medium term. They both look attractive till the time these stocks, they hold on to their previous support levels. So my advice would be very simple on Canara Bank, and maybe assuming if you, are looking for even investments in the other PSU bank and especially SBI, that keep the previous low. By previous low, I think for Canara Bank, they said it's at 81.5 or 82.5. I think that's the kind of range the stock has. So keep that as a support level and look to hold on to your long positions, because I believe that if the Bank Nifty goes through one more round of revival, you will have many of these other PSU banking names, especially Canara Bank, SBI, etc. They would come back and challenge their previous swing highs, and they would even cross that as well. So I believe keep 82, 81.5. I think the previous low as the stop loss and hold on to your long positions later.
Okay. Sharmila, your view on Canara Bank, what should the viewer do?
I would recommend a sell, and I would recommend a switch to ICICI Bank, where once again I expect numbers to.
Well, we've come to the end of our query section. Thank you to our experts for helping us out. But we quickly need to get to the HCL Tech Q2 presser and conversation with my colleague Chandra that the management had. She spoke to CEO Vijay Kumar and CFO Prateek Agarwal and got their take on the Q2 numbers. Let's listen in.
HCLites have delivered a stellar performance. We delivered 4.5% constant currency growth, which translates to 6.4% in US dollar terms. It's almost a perfect V-shaped recovery. And what's even more impressive is our EBIT percentage is 21.6. This is actually a 22-quarter high, right? 5-year high or 22-quarter high, whatever you want to call it. So that's been good. We signed 15 transformational deals. The momentum in the market for modernization and digital transformation services has been great. Our life sciences and healthcare vertical and the retail CPG vertical grew 8% plus sequentially, which is a very impressive performance. All verticals, all geographies, all service lines, all modes had a sequential growth. So it's a very good all-round performance contributed by, of course, some amount of recovery is due to the dip that we've had in the first quarter, but a lot of transition of deals that were done in the previous quarter got done extremely well, which helped in ramping up revenues. A lot of existing customers continue to demonstrate their faith on us by giving us more projects and some incremental work, which all got billed. And of course, Digital Foundation, which is our erstwhile infrastructure services, is a very, very strong, we're ahead of the pack for a long, long time. And the demand for making a robust digital foundation as a basis for digital transformation is a theme that we see in almost every large enterprise. So of course, all of this, and of course, our employees, last but not the least, they've done an amazing job. They walk the extra mile to keep our clients happy, despite all the odds that they faced. So we're also coming up with the increment cycle. All our employees up to E3 levels will get increments starting October, and E4 and above will get their increment starting 1st of January, which is a three-month lag from the regular cycle. So we are very thankful for everything that's happened. That's what would summarize the quarter, Chandra.
Awesome. So HCL is also giving hikes just like the other companies. That's good news for employees, hikes all around. But Mr. Vijayakumar, if I just look at the specifics, you mentioned EBIT at a multi-quarter high. You've also hiked the EBIT margin guidance. Now, we've seen EBIT margins, profitability go up also because companies have managed to rein in costs. Be it on the promotion, on the hike side, or be it lower SG&A costs. But this is expected to go up in the second half of the year. So are you still confident about your margins? I mean, are you seeing pricing power in some of the newer businesses, the digital businesses? What's driving this confidence?
Yeah, I think the second half also we have projected an overall margin. We've upgraded the guidance. It was 19.5 to 20.5. Now it is 20 to 21% is the full year EBIT guidance. So second half, we will continue to see a good margin performance. Of course, the salary increases that we are giving will create a certain impact and a few other things as we get into the second half of the year. So that's why overall margins in H1 was 21.1, but the full year we are guiding to be 20 to 21%.
Right. And in terms of the growth, I mean, it looks broad-based on the face of it across vertical geographies, but mode 2 for you seems to have grown faster compared to the businesses that you classify as mode 1, mode 3. So are you seeing more acceleration in one particular kind of business? How's it going to shape up going forward, Mr. Vijayakumar?
Yeah, I think we had a very balanced growth. Mode 1 has got a lot of digital foundation services. That has also grown impressively. Mode 2, of course, has grown almost 7% sequentially and almost 15% plus from a year-on-year perspective. This is all the new technologies, including cloud-native solutions, application modernization, analytics, Internet of Things, cybersecurity. All of this are high-demand services. And these services increasing is also good for the margin profile. Apart from the cost controls that are automatically in place, some of the higher value services increasing as a ratio is also good from a margin perspective.
Right. Mr. Pradeep Agarwal, if I can come to you, a lot of focus this quarter on also how IT companies are handling capital allocation. We've seen 2 buybacks come through from TCS and Wipro. Infosys, of course, declared an interim dividend. You've also declared dividend today. But broadly, on the capital allocation policy side, what other plans do you have to return policy to shareholders? Is a buyback on the cards? What plans do you have there?
So, Chandra, you opened the conversation talking about Diwali coming early. So our board has also decided in line with those thoughts, and they have decided to double the dividend that we have been paying on a per quarter basis. So far, we were paying 2 rupees per share per quarter. And even after the bonus issue, which we announced last October, and we issued those shares in December, we have been paying 2 rupees per share per quarter on double the number of shares. And now in this quarter, the board has doubled the 2 rupees per share per quarter to now 4 rupees per share per quarter. And the important thing is this is not a one-time kind of a thing. It is something that we intend to continue for the quarters going forward. And that is the important thing. It's a doubling, not only for now, but going forward. And that's the good news that our board has shared. Apart from the employees' increments, the shareholders are also getting double the benefit. So that's really the icing on the cake.
Right. And in terms of hikes, Prateek, what levels will this be applicable to? What percentage of employees? What's the quantum going to be? Some specifics that you can give us.
So it is going to be across the employee base, like we have done it always in the past. We stagger it over a couple of quarters, 3 quarters at times. It's basically for the larger population, E3 and below, we will be giving it effective 1st October. And for certain higher ratings amongst them. And the rest of the people, the senior members, as well as the rest of the teams would get it from 1st of January. So it is across the board. And the levels of increases would be similar to what we have done in the last couple of years. It would be around 6% odd for the India population. For the on-site and nearshore, it will be slightly lower.
And in terms of, Mr. Vijay Kumar, in terms of the outlook for the rest of the year, you have maintained that revenue guidance in constant currency for Q3 and Q4. Can we expect HCL to perhaps come again in the middle of Q3 and hike its revenue guidance? How is the deal momentum looking like?
So the overall pipeline is also at an all-time high. Our pipeline has increased almost 35% compared to what it was. In fact, our booking has increased 35% compared to what it was in the last quarter. Pipeline has increased almost 20% and it is an all-time high. However, conversion of these deals and that converting into revenue is normally a 3 to 6 months cycle. So we have done good bookings in the last 2 quarters, and that is the basis of 1.5 to 2.5%. We think we will be, with all the information that we know now, we will be in that range. And this is again a big upgrade compared to, if you see the last time when we announced the guidance, it translated to something like a minus 2% to.
Hello and welcome back to ET Now's Buy Now, Sell Now. With Mindtree posting a stellar Q2, my colleague Chandra spoke to the CEO and MD Devashish Chatterjee and tried to understand and decode the path ahead for them. Let's listen in.
See, as far as the margin is concerned, this is not something which is a one-quarter phenomenon. Almost for the last 12 months, we had put together a plan. We had put a program in terms of how do you take the margin to a band which is more appropriate. So what you see today is a culmination of that. Of course, COVID has also helped because some of the costs in terms of travel, some of the marketing costs, those might have gone down a little bit. But having said that, our view is that we are now in a band. We have taken the EBITDA up to 19.6%, and we are going to definitely maintain this band going forward. That's what our plan is.
And in terms of the deal wins, clearly a lot of momentum this quarter. What's your outlook as far as the second half is concerned? Which verticals in particular are you seeing more action in? If you can give us some color on that.
So if you look at our strategy has been very clearly articulated as 4x4x4. So there are 4 industry verticals we are deeply focused. So if I take those verticals, TTH is going to take some time to recover, travel, hospitality. But within the other verticals, there are 2 areas where we see a lot of momentum. One is CPG, and the other one is the technology. The technology clients. The spends are definitely very robust over there. But overall, I think it is fair to say that the growth is slowly coming back in the other verticals as well. It's probably difficult to call out too long, but we have said that given the pipeline that we have, given the order booking that we have made in the first half of the year, given all these aspects, we are very confident that we'll continue the growth momentum into the next quarter as well.
Right. A lot of companies are also talking about vendor consolidation kicking in among some of these clients. Will you benefit from it, or is the pie getting smaller? What trends are you seeing on that front?
Well, if you have aspiration to grow, you have to accept that there will be vendor consolidation. Difficult to call out whether will benefit or not benefit, but our aim is to benefit from those vendor consolidations. But we are fully geared for some of those vendor consolidations as and when they happen.
And in terms of the deals itself, DC, are we seeing it getting smaller, shorter, or are we seeing the large deals also coming on? In terms of the nature of deals, the pricing, what trends are you seeing there?
Pricing is more or less stable. In terms of the nature of deals, the pipeline that we have right now and the TCV that we have closed in the first half of the fiscal year, you can say there is a significant portion of annuity deals also over there. So we are seeing good traction in terms of annuity deals, longer, larger tenure deals, and we are bullish that that trend will continue. But in terms of specifically in terms of discretionary spend, I think that spend cycle is shorter, which means that clients are very concerned about cash preservation. So they want to really make sure that the run part of the business is taken care of. But even if the discretionary, they're a bit cautious in terms of for how long they want to do the spend.
Do you expect an uptick to happen perhaps after the US presidential elections, once there is some clarity, certainty? Are people perhaps holding on to budgets or plans right now? Will we see it going up post, say, November, December, January?
Yeah, difficult to say because we don't know what is going to be the outcome, but we are watching the situation very closely. But I can say that irrespective of that, as I said, I'm very confident of continuing the growth momentum into Q3. So we have to just wait and watch and see.
Right. Attrition has come down for you also. You've also said that you're going to roll out hikes from January. But I'm just curious about the total headcount. It's dipped by 128 people to 21,827 in a quarter where many companies' headcount has actually increased sequentially compared to the previous quarter. So is there something I'm missing here? Why are we seeing this happen?
Well, the thing is that's what I talked about in terms of the programs that we have put together in terms of operational efficiency. And I think you have heard me say that we do a lot of upskilling and cross-skilling within the organization. There was definitely a slightly larger bench when this COVID situation happened. But as we have deployed people from the bench, we have also ensured that we cross-train and up-train them so that we can deploy properly. So what you see over here is a reflection of the fact that we have managed the operational rigor extremely well. The utilization has gone up, and we are also able to grow the revenues.
Right. And in terms of hiring plans, DC, again, that is something that we have seen coming back. Every company now is talking about hiring, some in large numbers, some conservatively, freshers, laterals across the board. What plans do you have on that front? Because, that still continues to be a good indicator of demand and growth for the industry.
See, hiring has never really stopped. In fact, we have been hiring freshers, and the freshers have also come on board. They have been trained leveraging our digital platform during the COVID. So that is going on. But as far as lateral hiring is concerned, we will always keep on hiring based on the demand. So there is no change in terms of the plan. What you see is as a blip in terms of headcount going down is more of retraining that we have done just to make sure that there's an opportunity for us to bring in more efficiency.
Right. Finally, if you have to kind of give an overview of the second half, do you expect it to be better than the first half, or should we brace for some uncertainties because the COVID situation is still volatile? We don't know what's going to happen. How do you see the second half of the year compared to the first half? First half has ended on a very good note for almost the entire IT pack. There's a lot of cheer. As I said, Diwali has certainly come early. But do you see this kind of continuing through to the second half of the year?
See, there are a lot of uncertainties that I think all of us understand. And in the middle of uncertainties, you need to just make sure that what you can predict. At this point of time, the confidence we have is that the growth momentum will definitely continue into Q3. So beyond that, it's very difficult to comment. But we are watching the situation very closely. We are, gearing up for any uncertainties, any further uncertainties. But overall, we seem to be on a good track.
Let's move right on from IT to oil and gas. My colleague Ruchi is standing by to get us the latest on BPCL's EOI. What we're picking up is that the government is unlikely to give any extension for BPCL EOI's timeline. Ruchi, take it away.
After extending the expression of interest deadline for BPCL almost 4 times in the midst of the COVID pandemic, it seems that the government has decided that there will be no more extensions that will be given to BPCL. Top government sources telling us in ET now that they are unlikely to proceed with any further extensions for BPCL, which means that the last date for putting in or submitting expression of interest for BPCL stake sale will be the 16th of November. In fact, we're also given to understand that the government remains hopeful that there will be intense competition both from global players as well as domestic players for the stake sale process for BPCL, which will help them realize a better value. Remember, the oil behemoth BPCL is the big one from the government stable with respect to privatization process. We're given to understand that the government believes that even if they kickstart the process for expression of interest in the month of November, they will be able to at least look at completing the deal by the end of March. Having said that, the government remains hopeful that there will be a lot of players that will be interested. In fact, interested players will be ready by the mid-November. That's when the deadline for BPCL expression of interest ends. That is the 16th of November, and the government remains hopeful that the privatization process is very much on track.
Thanks for that, Ruchi. There's some more updates that we'd like to get from you on the divestment front. Concor, Container Corporation of India, is also in focus. We have an ET Now exclusive on that. A revised land licensing policy is up for nod as this was something that limited the Concor divestment. Ruchi, can you get us more details on this as well?
It looks like the government is all set to move with the privatization process for Container Corporation of India. The government was keen on selling their stake in Container Corporation of India in a bid to privatize the company. Now, we're given to understand that one of the big overhang for the stock was the land licensing policy. In fact, investors had also raised concerns with respect to the land licensing policy. We're given to understand that the government has been able to reach a middle ground with respect to the land licensing policy. Remember, Finance Ministry had proposed to the Railways Ministry that land leases must be given on a long term. In fact, had also suggested that the land licensing fee should be reduced significantly. We're given to understand that Railways Ministry has agreed to some of these recommendations. In fact, the policy by the Railways Ministry will be up for a cabinet nod very soon. In fact, in a month's time or so, the sectoral policy for container freight stations will be a big shot in the arm for the privatization process for Concor. As I said, this was a big overhang and now will be up for a cabinet nod, has been sorted out. The government will put out the expression of interest for Concor by the end of November.
Okay, thanks for that, Ruchi. Let's move on now to banking. and arguably the best private bank in the nation, will be announcing its results tomorrow on a Saturday, as they always do. Now it's going to be an interesting number because we already know so much from the recent update they just put out, right? So we know that advances are growing at 16%. We know deposits are growing at 20%. As a result of that, your CASA is holding up very fine. We also know they bought some small loans from HDFC Limited. So it's not surprising that their credit, their ability to grow credit is continuing, because they also have one of the strongest deposit franchises. And essentially, if no money is coming in, no money can go out. And HDFC Bank didn't really conduct any equity raise. So they're relying purely on their internal accruals to grow. With all that being said, NII should maintain its upward trajectory, coming in at near 16,000 crore. There might be a slight pressure on profitability this quarter. According to brokers, they're thinking 12,560 crore pre-provision, which is slightly less than what we saw last quarter. And then post-provision, they're thinking around 6,500 crore versus also, again, slight tapering off of last quarter's number. So there are brokers like Nomura, let me just flag that off, which do have more bullish targets. They have PAT of above 7,000, PPP above 13,000, and NII above 16,000. So we'll see where it eventually ends up, but these were the consensus figures I just gave you. Key things to look out for is just going to be the outlook on margins, the credit cost, if there's been any reversal of entries because of the SC judgment, and any restructuring that needs to happen to the pool based on the customers that were opting for moratorium or not. Everything else is expected to be pretty much stable state at HDFC. We'll also be looking out for the provision figure this quarter. They have been elevated lately. Given that we do have a lot of macroeconomic uncertainty, perhaps that trend will continue into Q2. On that note, let's also slip into a quick break here on Buy Now, Sell Now.
Welcome back. You're still watching Buy Now, Sell Now. Before we start off with the Market Fatafat segment, let's quickly flag off who the winners of today's quiz are, and what, more importantly, is the answer to the question. We asked you which of the following bearing companies is the highest ROCE. Timken, SKF India, Schaeffler, NRB, and the correct answer is Timken. We have picked out two champions who answered correctly and rapidly. First is Sandeep Bomisetti, and the second is Jay Shan. These are the two winners of today's quiz. Thank you so much for everybody else for participating as well. With that, over to you, Varun, for Market Fatafat.
Right, let's kick off Market Fatafat. In quick fashion, that too, beginning with two IT companies, HCL Tech and Mindtree. Now, I'm grouping them together because essentially they come from the same pack. Of course, they vary in size. HCL Tech just put out very good numbers, great constant currency revenue growth, great margin improvement, EBIT above 20%. Guidance also now going in the range of 20.5 to 21.5%. There were 15 large transformational deal wins in this quarter. Revenue shot up to $2,500 million. So on all counts, a very strong number, but like you saw with Infosys, slightly tapered off reaction. Mindtree down 10% 2 days in a row, so that's a bit concerning. Again, on the back of very strong numbers. So perhaps a little bit of this IT optimism was too inflated, and that's what we're seeing correcting now, because as far as the numbers are concerned, there are really no glitches for either of these two. But back to you, Karunya, for your stocks.
Next up, you have another earnings candidate, that's Cyient Limited. The stock is flying in trade on the back of a good set of numbers delivered last evening. Let me read out the headline numbers and parameters of Q2's performance. Revenue from operations has come in at 1,003 crore rupees. Profits 83.9 crores. EBITDA has come in at 158.2. Margins have seen a healthy 200 basis points expansion from 13.8% to 15.8%. So good gains coming in, especially on the margins front. The stock is up a good 4% in trade.
Right, Karunya. Coming to UPL, which is quite the opposite, it's falling in trade today. That's because the auditor KPMG resigned as auditor of the Mauritius entity, which is essentially the larger holdco for the business. That caused quite a few tremors on the street. Now, while we've tried to reach out to both KPMG and UPL to figure out exactly what transpired, there's been no response as of yet, and investors definitely a bit spooked by that one. The next stock on your radar today is going to be HDFC Bank. Their results will be out tomorrow on the weekend. Decent show expected from them. Great advances growth, great deposit growth. Let's see how that stock performs into close today.
Well, next up is Federal Bank as well, another earnings candidate. Of course, Varun would know better and would be able to give us better color on how things are likely to shape up for this one. Let me give you a few things to watch out for from the preview. NII is seen at close to 1,300 crores. We're looking at a PAT figure of 340 crores. There is likely to be a moderation in profit because of higher provisioning. Credit growth trends will be important to watch out for. Deposit franchise build-up, traction in the gold loan segment, restructuring if at all required in any accounts. These will be some important monitorables as far as the commentary is concerned. Federal Bank very much in focus ahead of its numbers.
Right, the next two companies in Fatafat today are Gujarat Fluoro and SRF. Now, last night, if you know, there was an announcement made that the government will be banning imports on AC and refrigerants. So, refrigerants are basically chemicals which create a cooling effect, and they're used in fridges and air conditioners. In India, here you have a few small guys who make it a very small cap. Reflex is currently on upper circuit. But then you have Gujarat Fluoro and SRF, which both have a very buoyant refrigerant segment. Good revenues coming in from there. And given that now Chinese imports are going to be banned, not only will pricing improve, but your capacity utilization in these facilities will improve, and your revenues will obviously see a huge bump up as well. So let's keep those two chemical stocks in focus as well today.
In fact, this development has also fueled a massive uptake on AC manufacturers, the local ones like an Amber Enterprises for that matter, which is up 7%. There's a Blue Star, which is also gaining quite smartly in trade, up 4.5% as we speak. In fact, we did speak to the management of Blue Star earlier in the day. Apart from this development, they also gave us a sense of how things are panning out, and the fact that they're already at 90% of pre-COVID levels, and demand is primarily being aided from work from home culture. They aim to grow by at least 10% in Q4, and they've maintained their market share as well. Some positive commentary also aiding the stock price uptick in trade today.
Right, and the next one we have is Airtel. Now, obviously, that count is in focus just because of the massive sell-off we've seen, but it seems that Comfort Investments will be investing $235 million in Nxtra Data, which is a wholly owned data sub of Airtel. The post-money enterprise valuation of Nxtra is around $1.2 billion, and Carlyle will be holding a stake of approximately 25%. This all transpired in the last 24 hours. So finally, you're seeing some deal action, nowhere close to the same scale as Jio, but some minor deal action in Airtel as well.
All right, so that was the Market Fatafat segment wherein we got you the key stocks to watch out for in trade. But moving right on, Times Network is always putting your interests first, and in this pandemic, we understand that your personal finances might have been impacted a tad bit. So we've started a special investor education series to guide you on growing your financial portfolio, and the series is called Nivesh Ke Fund Day. Take a look at what we have in store for you today.
Aisha, I was having a chat with experts on how can everyday investors manage the chop and churn or ups and downs or perhaps peak and troughs, bottom line, the volatility in equity markets.
Yes, I can imagine a lot of investors having that concern. So how should one manage the volatility?
Well, it's quite simple. Think long term, be patient, and invest via the SIP route in a mutual fund.
You're right. Consistency is the key. In the long term, regular investing really pays off very well, as power of compounding plays a very important role.
Yes, the power of compounding. It is truly magical. What it does, that it really creates wealth in the long term for a patient equity investor.
Yes, Nikunj. After all, equity markets are volatile by nature, and it's this nature of equity markets that actually makes them a source of long-term wealth creation.
And also, Aisha, remember, if you are investing regularly, you are able to bring the rupee cost averaging down, which is there are days you will invest when markets are high. Also, there are days you would invest when markets are low. But in the long term, it will really average out, and it will do wonders for your long-term portfolio.
Yes, and over time, the investor ends up benefiting by getting the investments at the average cost of all the SIPs done, thus not having to worry about timing the market at all.
After all, time in the market is more important than timing the market. Hope this edition of Nivesh Ke Funde has helped you gain some insights on how you should go about planning your financial future.
Funde to an ET Now exclusive. We've learned from sources that Google has begun an outreach within Indian unicorns and startups after all. The future over its updated Play Store rules. Google has started a one-on-one meetings to find out why the startup ecosystem is up in arms. Remember, Google had made a 30% fee mandatory for all digital goods and services from next year, which has now been pushed to March 22. Let's go across to my colleague Nayantara Rai, who's now joining in for more. Over to you, Nayantara.
This is an ET Now exclusive where we understand that Google has started an outreach with the irked startups and unicorns. Remember, the entire furor has to do with the updated Google Play Store rules, which means if any Android user buys any digital good or any digital service, including whether it's edtech, dating, music, you name it, they will have to give a 30% fee. That is, a startup will have to share a 30% fee with Google. We had seen a massive furor, and then Google had pushed back the date for launching the new rules to March of 2022. Now, having said that, as Google promised, it has started the outreach program. We have been able to ascertain the dialogues have already started with PhonePe. It started with BharatPe as well as with Dream 11. In fact, it's not the Google India leadership which is spearheading this. We're being told by our sources it's being done by Google's global leadership. The global leadership is actually fixing these meetings. They're participating in these virtual meetings, and they're promising the Indian startup ecosystem that they're going to be involved right from the word go. The Indian startups on their part have said that the 30% fee is far too high in the Indian ecosystem, that while it might be a global policy, it's far too high given the Indian dynamics, the Indian purchasing power, and just the way you see subscription services and digital goods already priced at. So that's one problem that the ecosystem has. The second one has to do with the payment system and the options that are offered by the Play Store for making purchases. It has so far excluded, for example, third-party e-wallets, and that has been another representation so far that has been made. We did, of course, reach out to Google. Google has confirmed to ET Now that these listening workshops have indeed started. So all I can say is interesting days ahead of us. It's Google's global policy. You've seen the Indian startups come together. It's going to be interesting to see if there's going to be any compromise. So far, you've seen a pushback on the date for the Play Store being updated.
All right, Nayantara, thanks for joining us with that exclusive story. Wrapping it up right here on the show. Thank you for tuning in.